chart of the day is BSN, Basin Energy. Now I'm going to show you where this came from, and it is a tie-in to my other brand sponsor, Mastering the Markets, masteringthemarkets.com. Someone posted here earlier this morning, 3 hours ago, good old Jack Littman. Thanks for the heads up on that, Jack. It wasn't a post to me, it was a post to I actually posted it in the public charts. So if you're a free member of academy.masteringthemarkets.com, you would have seen this actually. So I wanted to do a little quick thing on it. So add BSN to watch list. Hey guys, new here and popping my post cherry. Congratulations, Jack. A bit crude, but that's cool. BSN looks like it's following along with the uranium narrative. Looking at the daily, the on-balance volume has broken market structure and tested previous resistance as support, although it could be stronger with the relative strength index. Printed some awesome divergence. Would love to see this break the 16 zone and retest. If anyone has any critiques, I'm all eyes and ears, blah, blah, blah. So I thought I'd take a quick look at it. And we also want to know what it is. So we went to Grok. So look, so Basin Energy Limited, BSN overview. It is in the uranium and green energy metals. Now it's an exploration company. Okay, so this is where I need to give you a little bit of, don't just go out and buy it now. Do your research, okay? Incorporated in 2021, pretty new company, headquarters in Western Australia. Okay, market focus, uranium exploration in Canada's Athabasca Basin and green energy metals, nickel, copper, cobalt in Scandinavia. Seems like they're mainly in the uranium exploration game. Okay. It is basically, where are we? So Energy Limited, junior exploration company. Okay, so it's got a very small market cap. We'll take a look at that in a second. Focused on discovering high-grade uranium deposits in the blah, 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 blah. A globally significant uranium region that's in Saskatchewan. Hello to my lovely friends in Saskatchewan, of which I have a couple. The company also explores green energy metals, blah, 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 in Sweden. Let's see, bunch of projects. You can just, if you typed into Grok or any kind of chat GPT, you could just type in, what is BSN on the ASX? And it'll give you all the stuff. But they're an exploration, okay? Doesn't mean they've found anything just yet. Now, the market cap is small. I'll go to the chart. Market cap, if you have a look down here, you might not be able to see it. Oh, yes, you can. Underneath my face. Underneath my face, man. Market capitalization, 1.72 million. Very, very small. Okay, this is a micro cap stock. It's micro cap stock. It also might be micro crap. You never know, but it's a micro cap stock. It has very low volume trading. Someone posted on a comment on here and said something like it only traded, there we go, only traded $9,000 yesterday. So if you buy in big, you're moving the market very big, okay? So you'd probably want to get in very small. There's some reasons why you might want to get in from a technical perspective, and I'll show you those right now. Okay, so let's look at those, then we'll go back to the reasons why you might not want to get in. Okay, so let's have a look at BSN on the ASX using the tradingview.com website. This is the weekly time frame. Okay, so what do we notice? He was talking about OBV, and Jack was talking about OBV. He was also talking about the where are we? The relative strength index. Now, I think that was on a different time frame, but just give me a moment. Nope, didn't want to flip you. That's not what I was trying to do. Cool. I'll move you down and I'll get that. And maybe we'll go to the daily. Is that a little bit better probably? All right, let's take a quick little look-see. Cool. What are we noticing? Do we notice any divergences? Okay, first off, on the weekly time frame, you've got that massive move down here. Now, out of interest, we're at 1.6 cents. Okay, let's show you the quick historical chart. Let's do that quickly. Incorporated in 2021. Opened, well, this chart goes back to 2022, sure. This chart opened at 20 cents, okay? We had basically a double top at 20 cents, and then since then, all the way down to 1.2 cents roughly, and we're at 1.6 right now. On the weekly time frame, you can see that, yes, we do have some divergence. Not here, but starting from, at least on the weekly time frame, starting from here. So the divergence is where you have the price go down, or the price does one thing and the oscillator, the relative strength, does the opposite thing. Okay, so Good bullish. This is very good bullish divergence. So let me just say, from a technical perspective, excellent bullish divergence. At least that. Okay, so that's one blinker, one tick that is on. There and there. Cool. That's great. Good. The volume, however, I would say needs to be better, because what you'll notice here, at least on the weekly time frame, the volume is not also is not confirming it, although you may not want to confirm it with the volume, because with the on balance volume, as the price is going down, now I could be wrong on this, okay, so they may not be what we need to see. As the price is going down, no, that's actually selling pressure. No, so yeah, anyway, that's not good. As the price was going down, you wanted to see this go up, so we don't have a divergence here, so we just have one blinker on. Okay, that's at least on the weekly time frame. What did Jack say? He said OBV has broken market structure, looking at the daily. Okay, so let's go to the daily. The weekly looks pretty good. Okay, I'll get rid of that for a second. Let's go to the daily and see what it does there. He says on the OBV has broken. So on the daily time frame, you can see here again, lower low, higher low on the RSI. And he says that the OBV has broken market structure. Has it? Oh, yeah, okay. I can see that. So you're talking about, so if Jack is watching this, or if he does watch this, what he's talking about is right here. It's broken market structure. Where it broke out, it did. So that's actually true. It has broken out on the OBV. That's a good sign. It's still not here. You don't have that divergence with the volume. But it has broken its market structure. Okay, sure. And speaking of its fiat dollar market structure, this is where it hasn't happened yet, but it might. And I would suggest you really need to watch out for right here, exactly where we are right now at 1.6 cents. So this is all the positives, okay? If this breaks here, that could have a quick move, okay? It could have a quick move. Bear in mind the liquidity of this is very small. So if someone drops $10,000, that's going to push the price up quite a lot. And then if someone sells $10,000 worth, okay, that's going to push it down really quick. So it's quite volatile. Okay, so I'm going to put an alert on here just for S&Gs, if it allows me to do so. Yes, I have an alert on there right now if it cracks up through. So that's good. So what you could notice here is that if that changes market structure, that would be good. Okay, then that needs to hold. If that holds and then we do something like that, that might be a really good area to get through. You would want to say, if you wanted to, you could crack through that 2.2 cent mark would be a very decent confirmation. Why would that be? That would be signaling, well, then you've got a where are you? You have got that's a high there. You'd be doing a higher high from there, which is good. Higher low from there, and then another higher high. Game on. That would be really good. Again, it's quite volatile though. It's the liquidity is very small. However, if more people start getting into it, that actually increases the liquidity, so it might become less volatile over time. But right in the beginnings of this little potential turnaround, okay. Yeah, you don't want to put a lot down if you're thinking about putting some down. I'm thinking about it. I'm not there yet. And if I did, it would be a very small amount. Here's some of the reasons why I would consider not doing it. If I did it, it would be a very short-term play, I think. I'd probably just trade it out of interest, and I'd probably trade it between, let's see, what, there and there? That's probably not enough of a gain. Let me just check. Between there and there, no, we're at the 0.382 now. No, so I wouldn't do that. So out of interest, we are at the 0.382 right now for this particular thing. You can see it's right there. Okay, so that's why we're finding major resistance, because we're at the zag zone. From this high and this low, bang, right there. So it's got to get through that 1.8 cents. So really, if you wanted to say wait till 1.8 cents, you could. So I wouldn't be trading that because that's too small of a gain. Then you would want to be taking it probably from here and here. And then, gee, what do you know? The point is an amazing good old Fibonacci. I'll get rid of this for a second so you can see it better. The 0.382 to the 0.618 on this high and this low starts at that level of resistance. Cool. So that would be a good sign. Cracking through there, getting to that area, and then cracking through that 2.8 level. That's very good too. You could, if you wanted to, do a very risky play. If you decided you wanted to front run, here's what you'd be risking. Okay. If you break through there today, tomorrow, for example, you might consider doing that. You'd have to watch it very, very closely. And here's what you could potentially get. So what's that? I won't do it versus risk reward. It's 37%. It's not that huge, but let's look at the risk to reward at least. Long position, it's going to do that thing where it does that thing. It pisses me off. Okay, don't know why it does that. It's so annoying. Don't know why it does that to me every single time. Let's go down to here. We're looking for at least a 3-to-1 risk to reward, which I don't. Oh, we might be there. Okay, cool. Let me just show you. This is, you'd put a stop loss. This is where you'd put your stop loss, right there at, no, it's not good enough. So your stop loss is at 1.3 cents. That's if you're buying right here at 1.6 cents. You'd be looking for some decent area of resistance here at previous thing, and that's only a ratio, a 2-to-1 ratio risk to reward. You'd be wanting at least a 3-to-1 risk to ratio, ratio risk to reward, and that's putting it at the 0.5. Okay. It's probably more likely that this resistance gets taken out, I'd imagine. So you could really risk it for the biscuit. You could say, I'll take it up to, I'll take some profits here. You would actually consider, where is the trapped money? So the trapped money really isn't there. That's sellers, right? That's not trapped money. You can see a little cluster of trapped money right here. See that? That's actually where the trapped money is. So those could be people like, I've bought here. It didn't go up. It didn't moon. I'm out of this game. When it gets back to my break-even level, I'm going to break even. So I'd actually more expect resistance here than resistance here. Now, I could be wrong on that. So that's a 2-to-1 risk to reward. But this here is a 4-to-1 risk to reward. That's actually decent. Okay, so what you're risking is that it grabs your stop loss and it breaks down here. Not good, but you get risking like a 4 times as such than your losses, if that makes sense. So that's your 4 times. That's not bad. So that's a mini play up to that 2.8 cents. Risky. So here's the other risk that you're taking as well. When I saw it was an exploration company, and when I saw it had such a very small market cap, I went, oh, they'll do a capital raise. A capital raise means that they go, oh, we need to raise more capital for exploration, all that. It's always exploration companies are rife for going, the price goes up a bit and they go, ooh, we're getting a bit more interest now because the price is going up. We're going to do a capital raise to get more money for good reasons, not always good reasons, but for good reasons apparently, to, get more rigs to do this and to do that. It's very likely they'll do a capital raise. And I even asked Grok, what is the likelihood of them doing a capital raise? All right. Key factors include current financials. They reported a net loss for the half year ending in March of nearly 800,000 Australian dollars. Now, that was an improvement from a prior loss. New companies are going to run on losses, of course, okay? An annual loss of 2.75 million was noted with no meaningful revenue. Cash runway, this is a problem. Simply Wall Street reported that Basin Energy has less than 1 year of cash runway as of May, okay, based on its cash reserves and its burn rate. So implication with a limited cash runway and ongoing exploration costs, drilling, blah, 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 it's highly likely to need additional funding to sustain operations. So it's basically saying really likely, highly likely that it does a capital raise soon. I would actually agree with that. My opinion would be, if it breaks this market structure and heads anywhere up here, there'll be some eyes on it. Uranium's doing very well at the moment, and they're going to go, ooh, eyes on uranium. We're going to capital raise. So what that means is it will dilute your stocks, and that means price go down. So if you're trading this, I'd be only trading it, and I would not look to buy it for a long-term venture because they probably will capital raise at some point, and then that brings the price down. Cool. So watch for that. I'm thinking about putting a very small amount in. If it breaks 1.6 cents, ride it up to around about that 2.8 cents, and that would be if I get in at say 1.7. Oh, that's a 70% move. That's not bad. Or it's a 30% move. Not bad either. I'd watch it very carefully. Anyway, that is BSN, Basin Energy. Thinking about getting in, but not for the long term just yet. Cool. Thanks for watching that. Appreciate it. Let's do some comments and then we will probably get out of here because we're at the 1 hour mark.